Friends, in this part of our analysis we have tried to analyze the appropriateness of carrying value of intangibles and intangibles under development. The piling of huge balances in intangibles under development on consolidated basis should be seen in the light of 1. Liquidity crunch that company is facing. 2. The default in payment of statutory dues. 3. Significant reduction in market capitalization of company. 4. The market capitalization is constantly keeping significantly lower than net worth. 5. Aborting several running government projects in India. 6. The constant change in stand about the disclosed intangible that is development of content for teachers training in last 4 years. DA has further tried to evaluate the possibility of impairment loss of this investment in intangibles and intangible under development. But before that, let us understand the requirement of Accounting Standard 28, that is impairment of assets. Folks, in this part we will understand the Accounting Standard 28, that is impairment of assets. If the carrying amount of the net assets of the reporting enterprise is more than its market capitalization, then an enterprise is required to make a formal estimate of recoverable amount of asset. In case carrying value of assets is greater than the recoverable value, then difference between two will be equal to impairment loss on that asset, and same will be charged to profit and loss account. An enterprise is encouraged to disclose key assumptions used to determine the recoverable amount of assets. In the table below, DA has summarized the market capitalization vis-a-vis the net worth of company for last 2 reporting dates. Friends, as you can see that market capitalization is only 50% of net worth of core education. Due to further decline of stock prices in Q1 of financial year 2013-14, this gap has widened further. It is not a borderline case, it is case of significant and persistent erosion of market capitalization. Folks, we will see now that how company failed to carry on a formal estimate of recoverable value of assets, and assess the existence of impairment loss. Core has not booked any impairment loss in financial statements of financial year 2012 to 2013. Not disclosed in accounting policies that an estimation of recoverable amount of assets will be made in case the carrying amount of the net assets is more than its market capitalization on reporting date. Failed to show prudence by disclosing key assumptions used to determine the recoverable amount of assets. Now DA leave it to the user of this research report to judge with the 7 highlighted issues. 1. Market capitalization is significantly lower than net worth as on March 31, 2013, and June 30, 2013. 2. Fail to launch teacher training program, even after nearly 4 years after agreement with Oxford University, and changing stands each year. 3. Default in statutory dues payment. 4. Liquidity crunch. 5. Piling of intangible under development. 6. Huge investment in intangible assets. 7. Abortion of several government projects. Is the company reasonable in assuming that it had not incurred any impairment loss from April 1, 2012, to June 30, 2013, and investment in intangibles, and intangibles under development is true to its carrying value?